Good morning, everyone, and welcome to this yet another interesting session of Business World Insights in partnership with Aruga Apartments by Rockwell with the topic Investment Prospects for Service Apartments. So, my name is Josielyn Luna-Manuel, Business World Special Features Editor, and I will be your host and moderator for today. Please take note that we will be also answering questions from the audience later, so you may send your questions in the Q&A button on the bottom part of your screens. So let's start. According to UK-based consultancy, the apartment service, between 2008 and 2016, the global volume of service apartments more than doubled, swelling to 827,000 units worldwide. Cited among the main reasons are the often low rental rates for service apartments and its high occupancy rates. So in addition, Global Service Apartments Industry Report 2020 to 2021 stated that the service apartment sector has raised its profile as an investment class over the past few years and really shows promising opportunities for good returns. So in this session, we will know more about the country's service apartment sector and its promising investment opportunities. We are honored to have two experts from leading companies who will share with us their valuable insights. So let's start with our first speaker. He's currently the director and head of research at Cushman and Wakefield in the Philippines, Consulting and Advisory Services, the unit responsible for the firm's breakthrough property market research and thought leading publications. He has almost 20 years of solid experience and exposure in market research and analysis, strategic corporate financial planning, investment and capital markets advisory, risk management, project management, general business management, and development work in both the private and public sectors. He is also a licensed real estate consultant, appraiser, broker, and has been involved in the wide range of consultancy and valuation advisory assignments in the Philippines and the neighboring countries in the Asia Pacific region. Please welcome Mr. Claro DG Cordero Jr. Hi, sir.
Hi,
Good
hello, good
morning.
morning. Good morning, Jo. And thank you for that wonderful introduction. Thank you for introducing me and inviting me into this forum. So this morning, we will be discussing about the prospects of the service apartment sector or industry as an investment vehicle. So my topic for today is will evolve on the prospects of service apartments both globally, regionally, and locally. What are the different factors that will contribute to the growth of the service apartments sector in the future? So I think prior to discussing about service apartments, would like to offer you, just a brief background about, what we consider to be as service apartments. So in Cushman and Wakefield, we do consider service apartments as part of the general housing market. So, but if you will see in the illustration that we've prepared for you, the main difference is that it is halfway between house and a hotel. So even if different terms and concepts circulate for the asset class, the service apartment sector or in general the micro apartment industry have the limited residential period and operator concept in common. So we've noted that there are two pillars under the umbrella of the asset class, which is the micro apartment industry. One is micro living as a residential model, and service apartments offering commercial accommodation. So micro living concepts work with a minimum rental period and with student housing and business apartments that are often aimed at students or young professionals. But as we evolve, the concepts emerge also quite smoothly. The service apartments industry, on the other hand, are divided into these are mostly in advanced markets. So they're mostly divided into boarding houses and apart hotels. So they call it apart hotels, such which offer additional services such as cleaning or laundry services. So the length of stay in a boarding house is usually longer than in a apart hotel. So service apartments pride itself with extra space and separate lounges. So I think we are more familiar with the concept of a apart hotel in the Philippines, as most of the supply or most of the developments that are existing in the market right now um, are within that particular classification. So, how does the service apartment industry, how does it fare against all the other asset classes, and what do we think are the important factors and trends that will help influence the future growth of the service apartment industry? So we call them the global socioeconomic megatrends. These are long-term trends that are influencing the growth of the market. So one is the increasingly young population, more young professionals with more sophisticated demand, more single household, greater mobility, and a changing world of work. So urbanization, for one, has accelerated in recent years. Cities are increasingly growing at the expense of the countryside. So there's that migration towards the city center, which which actually um, provides a need for accommodation in the urban setting. So the knowledge culture. So the knowledge and information are considered to be the new capital. So like what I said, in the micro apartment industry, for one, there is that particular need to house young students. I mean, young professionals that are also still studying. So there are particular developments that are located near universities that service that particular demand. And of course, digitization. Digitization not only brings about economic innovation in new industries, but it also fundamentally changes our society. So rental offers and services are now being offered digitally, and as a result, flexibility and availability for tenants and owners are becoming more important, and that continues to evolve the service apartment industry. Of course, mobility, as I've said earlier, people are becoming less attached to their workplace and place of residence, and mobility and lifestyle and everyday living is increasing. So the young people are more mobile. The young professionals, they want they want to they want to remain flexible in the professional and working lives, and that basically changes the requirements for housing. So they want to be where their where the action is. They want to be in the center of everything. And the concept of new work, so what, where, and how we work has changed through the years. And the flexibility to work regardless of location is increasingly demanded, as we have seen during the pandemic, or now the prevalence of work from home is actually a stimulus to um, demand for housing, decent accommodation near or within the place of work. So, what is the service apartment? What does the service apartment industry offer? So we think real estate investment in the form of service apartment in times of crisis like what we're having right now, they tend to offer something unique to the market. As I've shown here, the yield rates in residential developments for both mid-end and high-end developments are fairly stable, suggesting that it is a good alternative instrument compared with other investment vehicles, which I've shown in the other part of the screen. So that's essentially the policy rates of the government. So you can see that whilst the policy rates are going down or decreasing, the interest rates are practically decreasing, people would want to look for other attractive investment vehicles. What are the other alternative investment instruments? So we have stock markets, for example. We have the 10-year bond rate, and we have real estate. So as you can see here, real estate is quite stable. I mean, uh, that is represented by the red line um, in the in the chart here. So the blue line is the stock market returns. So well, over the last few weeks, we've seen stock markets to have stumbled down, not just locally but also globally, um, which is also um, making other investments nervous, and they want to go to other investment instruments and investment vehicles that offer them fairly stable returns, and that is answered by real estate, and in particular residential or service apartment developments. The other factor that we see that will help determine the future growth of the sector is the demographic revolution. So, the growing young population, as I've said earlier, have helped a lot in instilling a long period of economic growth and gains in real estate sector. So, over the next 10 years, by 2030, we're looking at about 1.2 billion Gen Z population to enter the labor force, and that will pave the way for more demand for accommodation, housing in the city center. And we're not just talking about, locally, but as we continue to integrate with other regional economies, we are looking at expanding the local market, and including even the new upward mobile population workforce population in the future. So, service apartment is an asset class. So, why do we think service apartments model is resilient despite the challenges posed by the pandemic? We think that service apartment as an asset class is a good investment vehicle because it is right now, it's highly compatible with work from home users. So you have a fully furnished with all in rent, and that seems to be interesting for work from home users and promote the compatibility of life and work. Over the years, and even during the pandemic, there's unbroken investor interest and prime property yields remaining stable. So compared with other investment instruments, we think that the interest in high-end properties continue to grow and will continue to grow in light of low appetite for, like what I said, other alternative investment vehicles. And for the operators and the developers themselves, contracts with long stay corporate clients and uptick in interest from leisure travelers. And, as we get out of this pandemic, um, short term guests will help to provide stability for operators. So, that's how we think service apartments will continue to evolve, and we think that the new developments in the future will emerge to cater to active lifestyle and promote the overall health and well-being. Thank you very much. So we'll be ready later for additional questions from the panel.
All right, thank you for that informative presentation, sir. So some key takeaways from the presentation of Sir Carlo. He said that more investors are looking at real estate to be more profitable because really it's anytime actually it's a good time to invest in real estate because of the stable yields that it offers. And
Yeah.
1.2 billion Gen Z are entering the labor force in 2030. So that means
Yeah.
more young and mobile population is expected to dominate the demand for real estate products. And of course, some factors that make service apartments an asset class very resilient sector. So it's fully furnished with all in rent, investor interest remains high, and secure and stable income stream. Thank you again, sir.
Yeah,
So let's
thank you.
proceed. Let's move on to our next speaker. She has a diverse experience extending over 20 years in hospitality, tourism, and residential development. As the founder of TAJARA Hospitality, she heads the strategy, business development, acquisition, and asset management of the company. So TAJARA is a leading hospitality and consulting and development firm in the Philippines, working with clients throughout Asia. The company has been involved in several hotel and residential developments, integrated resorts, island destinations, and rollout of business hotels across the nation. She is also a three-time chairperson of the Philippine Property Awards, part of the region's Southeast Asia Property Awards, and the longest-serving judge for 8 years. So please welcome Miss Cyndy Tan Jarabata. Hi, Miss Cyndy. Good morning.
Hello, good morning.
Good morning. So you can deliver now your presentation, ma'am, anytime.
Yes, I think it's actually with you already. Yeah. Thank you. All right, good morning to all, and thanks for actually joining us today. So what is service apartment? I think Claro also said a lot about the service apartment models and also being a good asset class. Next slide. So service apartments, if you look at sometime like about 15 years ago, a little over the 10 years ago, it started with, or I would say branded residence started with Raffles Makati. Then at the same time, when they see that emergence and actually also yielded good returns to the investors, you now see, let's say, the Grand Hyatt and also the Shangri-La at the Fort. One of the good parts is that this was the introduction of how branded residences are. And then moved into, say, what we call the homegrown brands. And we saw Discovery Primea and also Aruga now coming into the picture. So it actually shows good investment for the developer side. And they also want to make sure that it's also well managed and professionally managed. Next slide. Soon to open now, we saw the emergence also of, I would say, service apartments and also branded residences in locations not only in Metro Manila, but also in Cebu area. And at one point, people, also investors, I mean, the developers themselves also, again, realized that in order to come up with a more resilient investment, and also it pretty much mitigates risk in development, it's also good that part of the development, aside from the hotel, also have the service apartment and also the residential component of it. Next slide. If you notice, buying a service apartment comes in different folds. So it's not only in terms of buying something that's high end, but it's also something like an upscale property. But why do people get into service apartments, or why do they invest? The first would be rental income. So it's a guaranteed rental income to the unit owner, wherein even if your unit is not rented out, the operator makes sure that you also get some sort of a fixed rent. Also, it's considered still as an investment because you do get a CCT. So that actually makes it different also in the Philippine context. So it is considered an asset class. You do get higher rental returns compared to a typical condominium within the vicinity. So obviously, when you buy something, you have to also choose where you want to invest, because you have to look at key locations. It should be, aside from nearby malls, there should be a good commercial area, retail. Also consider, say, how close it is in the business district. Definitely, there's profit sharing between, say, the operator and also to the unit owners. And in some developments, we also recognize that unit owners may also opt to reside in the unit and avail of the facilities and also services. And of course, as a unit owner, you can also enjoy the hotel facilities and amenities. And overall, it's really like a hassle-free management of the property, as someone's actually managing it for you rather than you keeping it like a typical condominium. Next, please. So what are the ownership perks? So aside from, let's say, all the yields that you get, the rental returns that you get, the units are actually turned over to you fully furnished already. So which means it's not just, the kitchen, dining, laundry, bathroom, but everything that all the amenities that you actually get in a typical hotel. So it's pretty much ready for leasing out. You do, as an owner, also get free stays in a year. So depending where you purchase it, you get something between 10 to to 30 complimentary nights in a year, and it's also transferable. You also get to use the hotel facilities, including some offers some special discounts in food and beverage, and also the recreational spaces. And at one point, you again have to check. Usually, it's operated by a professional management group. So, what are the current trends? Of course, due to the current conditions in the pandemic, service apartments actually was gaining popularity due to bigger space. It's also more cost efficient because the spaces are actually bigger, and it's more contained. So it's not like you mix with other guests. We also saw the service apartment pivoting to leisure demands, primarily because people wanted, to cook in the kitchen, to have a bigger, living space. And if there's anything, the emergence of what you call the staycation. So if you've heard of the staycations, you now have the workation. So like in my case, I travel for a week in different locations. Like, I picked already, say, Boracay, Cebu, even El Nido, Puerto Galera. So I pick areas where there's a kitchen or a bigger living area. So you're more comfortable in your space. You work, but at the same time, you just pick, let's say, if there's a gym or maybe it's close to the beach. So what we have here now is an emergence of a new kind of travel. So we'd say travel well, eat well, work well, stay well. It's also becoming a preferred accommodation for staycationers, LSG's long-staying guests, essential business travelers, and of course, you have your quarantine guests due to the pandemic as well. But one of the things that we would always recommend also to developers is that to consider flexible stays also for unit owners. So which means no blackout dates. So when we say no blackout dates, sometimes developers want to make it the point that, during the Christmas season, because you yield better, there's more people staying. You as a unit owner don't get to stay during those periods, but we would always recommend to developers to consider that. So we see a movement in terms of flexibility now. And of course, redesigning the units now to feature better workspace. So we see now new designs, and when we're also developing, wherein the workspace is an essential part in redesigning the unit. So if you are, not everyone is actually looking at, people are actually looking at the perfect asset class for them to invest. But we recognize that people who also choose service apartments, number one consideration would be location. In the end, it's always location, 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 as you've heard it. You also have to look at the track record of the developer. So things that you have to consider is that what are the previous developments that they've done? How fast is the turnover to the unit owners? Is it a fit out, or is actually very good. So these are things to watch out for. Track record also of the hotel operator. So which means do they actually get will you be able to get higher occupancy average rate compared to, let's say, a hotel next to it? What's important also is how they also maintain and how they also service when you are also present or also using your unit. And also check. One of the things we recognize, you also check TripAdvisor to just find out how people or people also, or the guests, respond to, say, how the accommodation is. Also look at the lease term agreement with the developer. Sometimes, are you the person who wants, let's say, you want to get into a mandatory lease back agreement? You have to look at, let's say, what are the rental renewals, resale value as well. Those are things that you can actually you have to look into the lease term. You also have to consider, is it a unit that you want to live in the next, 10, 15 years? So these are the future use of everyone who actually wants to purchase, because we observe that some people, let's say if they're professional overseas workers, they want to come back, let's say after 15 years and consider this as their home. And just like anything, it is a capital, it is still, an asset class. Definitely expect capital appreciation. So do your homework. And what's important is also to evaluate what the resale value is. So 90% of all millionaires become so through because of owning real estate. So depending on the asset class again that of your choosing, do your homework. And anyway, so I hope that you pick the right investment. Thank you very much.
Interesting presentation. So just some key takeaways from her presentation. So some of the benefits of buying service apartments. It offers higher rental returns compared to typical condos. Of course, enjoy the hotel facilities and amenities and overall hassle-free management of property. And then some trends happening in the sector: service apartments gaining gaining popularity because of bigger space and cost-effective accommodations. So it also offers flexible stay for unit owners, which is very important. And I love this part, the emergence of workations. So from staycations, we're shifting to workations. So it makes work more fun and comfortable. And of course, when choosing the right investment, investors should consider the location, track record of the developer, and capital appreciation and resale value of the property, of course. Thank you
Correct.
again, Miss Cindy. All
Thank
right,
you.
so let's move forward to our panel discussion. So to start off, let me direct the following questions first about the service apartments landscape to Sir Claro Cordero. But of course, anytime you may chime in, Miss Cindy, if you want. All right.
Mhm.
So hi, Sir Claro. So for the first question, you have briefed us about the service apartments landscape, especially globally and locally. So if you want to summarize the landscape now of the sector, can you share with us some of those?
Yeah, I think just to briefly summarize the service apartment industry, I think the being a sort of a distant relative of the hotel hotel sector, we all know that the accommodation sector, the hotel accommodation sector, is one of the hardest hit by the pandemic. So we see that recovery may take a while. Full recovery may take a while because of because of the restrictions to travel. So we don't see a lot of business travelers. The even the leisure travelers are have been limited even locally. So, but like what we have been pointing out earlier, Cindy and I, the service apartment sector is a little different though from hotel segment, primarily due to its ability to I think answer the need for more safe environment for travelers. Like, even though we don't have a lot of travelers right now, there are people who are stranded in this country. So the foreign travelers, foreign nationals, who are still working in the country, and they need to be housed in a highly professional professionally managed accommodation. So I think that's where the strength of the service apartment sector is. That's where its strength lies. Its ability to service that kind of demand, and to be able to distance itself from a typical, let's say, quarantine hotel environment, and that becomes a safe haven for for travelers, for sources of demand that really require this kind of accommodation even during this time. Yeah.
All right, thank you, sir. So there's really a demand for service apartments right now, as PCD told us earlier. So how about in terms of demand? Are we seeing an increase that should be met, or how is it now?
Yeah, demand, like what I said, it's if you look at the core source or the main source of demand, that's really business travelers. um but like what I said, there are segments and sectors in the economy that are still growing, and that we foresee to grow right after the pandemic. we've always pegged the recovery of the economy and the market with the successful inoculation program of the government. I think even though we're slowly getting there, the sooner we get that herd immunity and all that, then I think the confidence of the investors and the market at the moment will make this sector again in demand for this type of travelers and demand sources. But suffice it to say, when I say what are these sectors that we see that will continue to grow and
Mhm.
supply the demand for service apartments, of course, the BPO sector. We think that the BPO segment will continue to grow after the pandemic, and that's on back of I think sustained demand for outsourcing. More so now that we are in this kind of this kind of new world, or like we say a new normal, where I think outsourcing will become more important for businesses. Then I think we are in a best position to capture that opportunity. And the service apartment sector and segment will be one of the main beneficiaries of that recovery.
All right, thank you, sir. Would you like to add something to that,
Yes.
Miss CP, about the demand? Yeah.
Yes. Well, I wouldn't say demand. I would say preference. We saw a strong, because there was a time where service apartments, the choice now of people are actually just going to the hotel. But now we saw like a bit of a shift now to service apartments, or primarily because of we've actually gotten used to about working here. Then at the same time, in between breaks of the Zoom breaks, we go and maybe prepare something in the kitchen. So we want a similar setting now when we actually go into what I would say the workations, diba? So so we saw that. And like for instance, when I travel, one of the things I would always ask is that the big typical convenience of having a hotel, like the gym, good food. Is there like a good drinks, or like a bar, diba? But of course, practicing the social distancing as well, diba? Because you also have to choose the people you travel with. I travel with mga bubble groups, eh. But at one point, we saw that increase in service apartment, primarily because like you want bigger space. You pay basically the same amount per night, but at the same time get a bigger space. Like it could be between 5 to even 10 square meters bigger, and that's actually quite big for us already. So I know that Clara actually said about when the inoculation comes and so on. I mean, I don't know. I'm practicing because living with COVID, it is reality of our life, and of course, I also encourage people to get into this whole vaccination process as well. But I travel. I'm in the business of travel. I'm in hospitality, and if I move around, sometimes I do. One of the preference now is that if there is an option to stay in a service apartment, I'll do so. Yeah.
All right, thank you. Thank you, ma'am. Thank you, sir. So for our next question, about trends. So what trends do you think will shape the service apartments industry in this new normal?
Um, uh, I mentioned about redesigning the space, and I think some people I saw. I mean, in our in our in all the hotel projects that you actually have here, or sometimes parang service apartment, the kitchen is like okay, just like a pantry, or you just have like a microwave and so on. So some actually do ask already for a proper kitchen. Kahit na you say it's a mini kitchen, or like more like instead of a mini bar, you call it like a maxi bar. Diba? Meaning you have a lot of the things that's already available for someone who'd like to stay. One of the things I've also recognized, there's some brands or some operators that actually put a mini gym inside. It's not like a gym, but it's like it's structured, like it's created on the wall. And I don't know what it's like. It's one of the project. I'm not indoor, but one of the products of, is it um, techno gym. So, but it's actually it's already designed as part of the room, right? So, because some people actually do want more privacy these days, and only when the time comes that you have to say eat out, that's the only time you actually kind of, I would say, socialize with distance. So we saw that trend, and at the same time, yun nga, that that workation, it's getting pretty big. Like I know not only myself but some friends of mine, they'd stay even a month in hotels or service apartments. So we see that moving.
All right. So let's go to the investment side. So I'm sure we already talked about this earlier, but can you please emphasize what are the investment prospects that investors can maximize when they invest in service apartments?
Okay, so if I may go ahead, Cindy. So, like what I said earlier, it's for investors. You look at you look at steady stream of income. So unlike in short stays, accommodation, you have assured, at least if you've captured corporate clients and all that, then you have more or less long staying guests, and that contribute a lot to the stability of your income over the next few months or few years. So which is why a lot of people are looking at the service apartments to be, they say crisis proof, because if you have a contract for that particular company, the company will tend to honor that, and then you have assured accommodation, and then you have assured guests, or your occupancy will not steadily decline once the economy, say for example, turns into worse. So I think that's one important consideration for investors for service apartments. You have uh, you have that kind of although of course it's the returns are not as big as if you're the one who's really um, managing it. But I think that getting a professional operator to do that for you will save you a lot of hassle in terms of managing, keeping up the unit, for example, to make it marketable to guests and visitors. Yeah.
Do you want to add something, Miss Cindy?
Yes. Well, you have to also pick where you're purchasing, you're buying. So location definitely is key, just like any other condos or investment that you want to get in. Also, in it's if you want to get a bank loan, then part of the monthly amortization can also be paid off by the rental that you actually get on a monthly basis. If you also resell, one of the things to consider is that normally it's higher. Like, if it's a properly, well, you have to, again, the developer and the operator, normally it sells higher as well. So aside from the monthly yields or rental yields that you actually get, when you resell, normally this unit is 20 to 25% higher compared to a typical, just a regular condo. Um, One of the things I should also mention is that you also have to check before you purchase, is that if the operator or developer has also engaged, let's say, put part of the inventory in the Airbnb. I don't normally, these are like in my case, when because I also make investments on my own. In my case, I'm very particular on if let's say the developer or the operator actually puts part of the inventory in the Airbnb, because now it cannibalizes on whatever investment that you put into. So for me personally, I would not consider any investment that actually puts inventory part. Yeah, I mean in the Airbnb. So things are to watch out for is this one, but it's still another preferred asset class I would also personally consider.
All right. So how does it differ investing in a service apartment compared to condos and other properties? So what are the major differences?
Service apartment kasi you do get the service. So you call in for could be in-room dining, cleaning,
Mm-hmm.
including watering the plants. So you actually have all the services of a hotel. Unlike, let's say, a condo, wherein you have to fix everything, call the maid service, you even have to house. Sometimes some people also have to house their housekeeper or their homekeepers, their housemaids. But we see also the change because as you know, the new generation or even the younger families now, sometimes unless you have a small child then you need a yaya, but otherwise you don't actually want too much of the household help. And you also notice the household helps, it's like a dwindling na population because they're getting more educated. They want actually better jobs, and you also have to give actually better revenue streams for them, and a lot actually go overseas. So a lot of the younger families also want more privacy, diba? So with that mix and that, everything being considered, homes also actually get rid already of the what do you call the extra room, diba? Or make it like maybe a
Mm.
study or an office. So there's a lot of things that's evolving. But definitely that's a big difference between the condo and the service apartment or service residence. You basically don't get the service in a typical condo. And if you want to get rental yields, what you do is manage it on a either daily basis on Airbnb or monthly nga when you actually do get, let's say, a long stay guest. But you will have vacancies with a service
Mm.
apartment. That's why you have to look at contracts. You have to look at who the developer is, who the operator is. They have to be able to get you higher occupancy, higher average rate,
Mm.
and the revenue stream, kasi the revenues kasi are spread. The profits are spread all to all unit owners. So whether or not your unit has been used, you still get rent.
Yeah.
Do you want
If
to
I,
add something, sir? Yeah.
yeah, yeah. If I may add, I think owning a service apartment and putting it in a contract, in a loop, and put it in a contract with a professional operator. I think it also saves the hassle for the unit owner to do the due diligence, for the tenants. And I think that's quite important at the during this time, and when you don't know, for example, who your tenants are. And normally it takes a lot of work to do that, to do the due diligence, because you don't want your unit, some kind of like bastardized because you have a tenant who's doing a lot of these things in your unit. So, but with service apartments, they're the ones who filter the guests for you, so you're assured that your unit is well taken care of. Yeah.
All right. So we've talked about the benefits of investing in service apartment. How about the risk that investors should look out for?
In terms of risk, Cindy mentioned earlier about getting into contracts with operators, that yeah, I don't think we don't have a lot of this kind of operators who don't really follow the contracts, right, Cindy? So um, definitely when you get into the business and you want to purchase a unit that you eventually convert into a service apartment development, or a unit, you need to look at the quality of the work, or the roster of developments that this particular operator has handled. So I think that's the major risk that I'm thinking of right now in
Yeah.
terms of owning service apartments.
So
Yeah.
risk would be bad developer, bad operator. So that's why you have to do your homework. I mean, it's quite an investment now. You're talking about millions. So you really have to do your due diligence, because it's still an investment, just like anything that you want to put money into.
Yeah.
Also,
Okay,
check
so do your homework.
your homework in lang, di ba?
Do your homework before investing on anything.
A track
Or
record, diba? Just like
yeah.
anything, you get into stocks, you get into anything, just do your homework. Yeah.
Yeah.
All right. Okay. Thank you, Miss Cindy and Sir Carlo. Thank you for answering all my questions. So we'll discuss more later in the Q&A, and then we'll take in some questions from the audience naman. All right?
For Q&A.
So, yeah, for with the audience. Okay. So
Okay.
for now, all right. Let's move forward to the next part of our program. So let's welcome Ms. Isabel Rufino de Leon, Rockwell Land Sales Head, who is currently handling the growth and profitability of residential projects such as the Vantage at Capitolio and East Bay Residences under Rockwell Primaries, as well as the Grove and Edades Aruga Apartments under Rockwell Land, to give us a presentation about Aruga Apartments by Rockwell.
Hi, good morning. Thank you, Joe, for that introduction. It's my
Good
pleasure to
morning.
be here. Thank you to all our participants and guests for joining us on this Wednesday morning. I'm honored to take a few minutes to discuss with you what the Aruga Apartments by Rockwell is all about. So, on the next slide, let me share with you the location for our development. So the Aruga Apartments is located within the Rockwell Center. This is actually within Edades Tower, our building across the power plant mall. The main entrance of the Aruga Apartments is along Waterfront Drive. Next, Aruga opened its doors in July 2014 and has been operational for nearly 7 years now. We have a total of 114 units across 6 guest room floors. That would be on floors 3 to 8, with a total area of 7,186 square meters. Our amenities include a swimming pool and a kiddie pool, pocket-sized gardens, a function room at Aruga Cafe for intimate occasions, and the Edades function room for business meetings or grander occasions, and an indoor fitness gym with state-of-the-art equipment. Allow me to briefly share with you about Aruga's historical performance. Pre-pandemic, there was a steady growth, as you will see from 2017 to 2019, in the average earnings per square meter and yield that our first unit owners enjoyed. In 2020, while most industries and businesses were not spared by the effects of the pandemic, Aruga Apartments was still able to achieve an average of 3.1% yield for our unit owner investors. This 2021, we are seeing a slow and steady recovery with our performance approaching pre-pandemic levels. As you will see in the first quarter this year, our yield grew to 4.9% with an average earnings of 955 per square meter, which our unit owner investors recently received and enjoyed. On the opposite chart, you will see Aruga's ADR, or average daily rate, in black versus other Makati serviced apartments ADR in blue. Aruga's ADR ranged from 6,100 to 6,900 per night in previous years. You will notice that since the pandemic started in March last year, we have been able to sustain our ADR at 6,100, consistently above other Makati serviced apartments. For the first quarter this year, Aruga's ADR is at an estimated 5,600, still above other Makati serviced apartments. More importantly, this is in line with our strategy and transition to our new business model to adapt to the changing times. So what is this new business model? On the next slide, Aruga Apartments will continue to provide the safety and health, comfort, cleanliness, and high quality service that we have been providing for the past 7 years, but this will be coupled with a more affordable rate for our guests and clientele. So a more affordable rate means that we can attract more guests to stay in our serviced apartment while providing the essential services. We're still able to provide additional services as needed, so guests can certainly add on services for an extra cost and tailor fit their Aruga stay to best cater to their needs. A more affordable rate also means that Aruga can operate more efficiently at a lower cost and pass on the savings as earnings to our unit owner investors. So as a result of Aruga's new business model, we are already seeing a higher occupancy for this year compared to last. Now that I've shared a background on Aruga, I'm pleased to share that Rockwell Land is currently offering Aruga Apartments for sale. So Aruga is then a hassle-free investment opportunity for our unit owner investors. As income is pooled, unit owner investors are guaranteed to receive a steady stream of income or a monthly rental payment relative to the number of square meters of the unit you own. So in this way, the investment is hassle-free because you don't need to worry about finding a tenant for your unit and doing the due diligence that Mr. Claro mentioned earlier. You also don't have to worry about unit vacancy or your unit's upkeep and maintenance because our experienced Aruga team will take care of that for you. So you simply invest in your unit of choice. This will be managed by our Aruga team, and rental will be paid out to you monthly, dependent on Aruga's performance. So you may choose from 4 unit types. We have a studio unit, which ranges in size from 32 to 35 square meters. The price starts at 8.8 million and your monthly investment starts at 52,000 per month. So we have payment terms that are extended until December 2022, next year. We also have a 1 bedroom premier with um, a size of 46 to 53 square meters. It starts at around 14 million and your monthly amortization will start at 82,000. Our 1 bedroom suite are the larger 1 bedroom units. These are 62 to 66 square meters. The price range would be 15.8 million and your monthly investment starts at 93,000 per month. And lastly, we also have 2 bedroom suites available, 106 to 107 square meters with a price range starting at 26.5 million and your monthly investment will start at 156,000 per month. Next, I'd like to show you actual photos of our units by unit type. So this is a sample for a studio. You'll notice that the units already come fully furnished with quality finishes, furniture, and appliances. So this is all part of the package. We also have our 1 bedroom premier. This is the 46 to 53 square meter unit. Next would be our 1 bedroom suite at 62 to 66 square meters. And lastly, we also have our 2 bedroom suites from 106 to 107 square meters. So earlier, Miss Cyndy was mentioning about having, fully equipped kitchens, and our units also come with fully equipped kitchens. Okay. Now, on monthly rental payment, how does this work? Our unit owners are entitled to receive a guaranteed minimum monthly rental payment until December 2021, or at the end of this year. This means that in the off chance there is low occupancy this year, you are still guaranteed to receive a minimum amount. And I'll show this on the next slide. But starting January 2022, monthly rental payment will depend on the actual performance of Aruga. Although I mentioned earlier that we are seeing an increase also in occupancy. And we're optimistic that with the vaccination rollout program of the government, as we move towards herd immunity, hopefully also um, our guests will be more optimistic about staying with us and will be able to increase occupancy throughout the rest of the year. So for your monthly earnings entitlement, since we have payment schemes, you're entitled to receive monthly earnings once your unit is 50% paid or 50% purchased. Meaning if your unit is 50% paid, you are entitled to 50% of the earnings. If your unit is fully paid already, you've fully purchased your unit, you're entitled to 100% of the earnings. On the next slide, I'll show you what the approximate minimum guaranteed rental payment will be. This is until December 31, 2021. So for a studio, it's about 20,000 per month. This is the income that you will receive monthly. For a 1 bedroom suite, it's 40,000 per month. And for a 2 bedroom suite, it's 65,000 per month. So you're entitled to this if you fully purchase a unit, or you're entitled to 50% of this if your unit is 50% paid. Let's say if you take a longer payment term. Now, this is the minimum guaranteed. So monthly rental payment may be higher depending on the Aruga Apartments performance. The exciting part, unit owner perks. So aside from the monthly rental payment that the unit owner investors can enjoy and the hassle-free management of your unit, other perks of our Aruga unit owner investors include 30 days usable stays at Aruga per year. So you still will earn your monthly rental payment, and there is just a small for operational expenses. Another perk would be you will receive preferential booking rates of up to 10% to 20% off of the best available rate. So let's say if you're booking for someone in your family beyond the 30 days usable stays, you can get it at an even better rate than the best available. And then, lastly, you may avail of the Rockwell buyback option after 10 years. You can sell your unit back to Rockwell at a guaranteed 15% yield, or you may even choose to sell this to in the secondary market at a higher rate if you choose to do so. Okay, so for further inquiries on the Aruga Apartments, please feel free to reach me through my number or my email. Our Rockwell team will be glad to assist you and share more about this investment opportunity. Thank you very much.
All right. Thank you, Miss Bell. To our investors here, I'm sure you took note of Aruga's very good performance and historical growth over the years. And of course, their exciting investment offerings for everyone and the new business model. So affordability plus safety, health, comfort, and cleanliness. All right. Thank you again, Miss Bell.
Thank you also.
Now, okay, let's take some questions from our audience. Let's welcome back on to the screen our speakers, Sir Carlo, Miss Cyndy, and as well as Miss Bell. Okay, so let me address my first question to Miss Bell of Aruga. So someone is
Okay.
asking about the target market of Aruga apartments and how did it change or is it changing over time?
Okay. So on the target market of the Aruga Apartments, prior to the pandemic, we were actually catering 50% to corporate guests or business travelers and 50% to leisure staycationers. Um, During the pandemic, there were some limits put to leisure stays. Like let's say when it's NECQ just last April, we weren't allowed to cater to leisure stays. But despite that, despite those limitations, we were able to achieve a 67% occupancy also for the first quarter because we cater to essential business travelers. So you'll notice that most of the other service departments in Makati currently function as a quarantine facility. And at this time, Rockwell Aruga is not doing that. But what's great is we are the only accredited service department in Makati, accredited by the Department of Tourism, to cater to essential business travelers, which have been the bulk of our demand right now. So we're actually able to sustain and strengthen our demand because we're catering to the essential business travelers. Aside from that, we have long-staying guests, and we also have partnerships with other corporate accounts. So if they have to send anyone here, let's say workers from the province, for essential business, they partner with us and they send them to Aruga. When things become better, maybe when the vaccine program is really underway, we're hoping that leisure stays will again be boosted so that we can again cater to staycationers and those who used to like to book for occasions. So that's great because while it's not leisure is not so strong now, we're able to still maintain our demand. So when leisure comes back, hopefully that also translates to a higher occupancy and a higher performance for Aruga.
Okay, thank you, Miss Bell. So we have another question from the audience. So anyone can answer. Can some Airbnb listings be considered service apartments? If not, how are they different from that segment? Thank you.
I wouldn't say serviced apartment because usually Airbnb is managed by the unit owner themselves. So if you need cleaning services, they would handle it. It's totally different from a serviced apartment because serviced apartment you have one call service for housekeeping, even in room dining. So just like whatever you actually enjoy in a hotel. So it's totally different.
Would you like to add something, Sir Claro?
Yeah, I think that's basically the main difference. And if you look at the Airbnb model, the unit owner themselves are the ones who are marketing the the property, unlike in service apartments where you have a professionally run operator that does that for you. Yeah.
All right. Thank you, Ms. Cindy, Sir Claro. And our next question is, where does one look for possible investments in the service apartments industry?
Mhm. Um, I'm not sure if I understand the question properly. Where does one look for possible investments in the service apartment industry? But I'll try to answer it nonetheless. So I think if your question is where can you find investments, service, possible investment opportunities in the service apartment industry, I think you look like what we've been saying since earlier. You have to look at a good location, an area or a development that caters, like what I said earlier, caters to active lifestyle and promote the overall health and well-being of the guests, because since we have the pandemic still, we'd like to be able to go to an accommodation where everything is near, everything is within our reach. So when you want to go out to do your grocery, for example, because you're doing the cooking by yourself, or you just want to basically take out something, it needs to be somewhere near, these establishments, these support establishments, for you to be able to enjoy, the unit or the development. So that is a plus for this service apartments. For another one, I think is um, developments that offer or they instill sustainability practices, be it in engineering, construction, or property management, because a lot of corporates really like that. As Bell mentioned earlier, majority of their target market is really the corporates, and corporates like to they like to engage with businesses that offer basically sustainable practices, because to them that's part of their corporate social responsibility. Yeah.
That's true. Sustainability is really in right now.
Yeah.
Would you like to add something, Miss Del, Miss
The,
Cindy?
when it comes to locations, investment locations, Metro Manila, say Makati, you can also consider say Ortigas, but we also saw the growth in outside of Metro Manila. So you have Cebu, also Davao, and even Batangas. So depending on, let's say, location, specific location, we're not just talking general, but specific location. Is it nearby, say, business districts, commercial areas? So those are key takeaways. No, if you want to invest, again, do your homework. And going back to, let's say, sustainability, booking.com. So because a lot of the hotel operators, what they do is that they also they also kind of bring it to, say, the OTAs or the online travel agents. Booking.com, they did a survey where 80% of the people who book in hotels or service apartment, they want to make sure that there are sustainable practices by the operator. So how it's being developed by the developer and how it's also being operated.
All right. Thank you, everyone. So for the last question from our audience, what are the best possible opportunities for those apartments with limited amenities, where the market is for students like the vicinity are near in schools. So probably this is someone, from a student.
The best possible opportunities for this kind of developments with limited amenities. Of course, you offer and you maximize what you have. Like what we're saying, you're offering location as a unique advantage for your development, then highlight that your development is near to everything, especially the school, because that's your target market. And in terms of amenities, limited amenities, I think there are new technologies right now that allow you to maximize as well, um, in the use of amenities, no matter how limited it is. For example, if you're catering to students and you have a limited common area, then you can go for booking system, for example, so that you don't um, you have scheduled use of amenities rather than keeping them in that area for a long time. So I think that's one way that you can maximize technology as well to be used in your development.
I don't think limited amenities puts too much of a challenge in terms of leasing, let's say, your apartment. I mean, in the end, people still want to kind of get confined, like, you cook, do your laundry in one specific space.
Yeah.
So, yeah, so I think it's not too challenging that way. But if you're just about to purchase, let's say, an apartment close to, let's say, the schools, there are actually developers now who are also putting up amenities that are like, a swimming pool and a gym inside the building.
Yeah.
Miss Bell, would you like to add something? Very good.
Yes. Um, so the question was on possible opportunities for apartments with limited amenities, especially those that are close to schools. And when you think about real estate, you can consider, let's say, residential condos that are close by to schools and universities. But also at this particular time, I I know that a lot of schools have shifted to online classes, and I think this is also where service departments have an opportunity, because there are some students who are who are part of this workcation trend, and who like to book, let's say, in a service department that is fully furnished, fully fitted, and and has a strong internet connection, has everything for you. So that's one opportunity that the service departments has. The other would be, if you're really looking for something close to schools, then some developers like Rockwell actually offer residential buildings that are close to major universities as well. But then these are two different investment opportunities. One is a condo that you will have to manage on your own, or at least register with leasing, but then there could be possible vacancies. And another is a serviced apartment where you're guaranteed a steady stream of income, whether or not your particular unit is rented out at that time.
All right, thank you, Miss Bell. So really, the young population is our next target market for service apartments and for the real estate industry as a whole. All right, thank you everyone for answering all those questions. It's time for our panelists to deliver their closing statements. So please share with our audience your key takeaways from today's discussion, or what they
Mhm.
want them, what they want to emphasize about our topic today. So let's start with Sir Claro, to be followed by Miss Cyndy, and then Miss Bell of Aruga. Sir Claro?
Okay. Yes, thank you, Joe. I think taking off from our the last question earlier, if I may summarize, the whole discussion in three words today, I think it's young, profitable, and crisis-proof. The market for service apartments will continue to grow strongly, and we think that it will continue to evolve in the coming years. Of course, there are increased expectations and requirements of the core target markets, and that will continue to call for new concepts in the industry, like the changing demographics, greater mobility, and a changing future of work, like what we're having right now, will help evolve the market. Again, I can only emphasize, that the industry or the market is still at a very young age. I mean, very young in the Philippines, and it will continue to professionalize. And we foresee that it will become a strong investment asset class in the future. Thank you.
Thank you, sir. Miss Cindy?
Okay, so definitely service apartment is an asset class to also consider. But of course, do your due diligence, do your homework. You have to actually be comfortable in whatever investment you're going to make. I would also consider that the COVID situation that we have now is temporary. And then you have to actually start planning for the future. And workation definitely is here to stay. That's it. Thank you.
Thank you.
Thank you, Miss Cindy. And Miss Bell? I think you're on mute, ma'am.
Sorry about that. I
Okay.
do believe that we have heard today about the resiliency of the serviced apartments as an investment and as a good viable investment compared to other vehicles. We've seen that a shift in strategy or business model, like what Rockwell Aruga is currently doing, can allow a business to increase occupancy and also maximize profitability for unit owner investors, even in the most challenging times. So for Rockwell and Aruga, and for the industry in general, we are seeing steady recovery. It may be slow, but hopefully it is sustained, as again the government rolls out its vaccine programs and travelers become more optimistic to travel and to leave their homes as well. And hopefully, when leisure stays also can be fully accommodated, this will mean even better news and higher occupancies for serviced apartments and for Aruga as well. I do hope that the information shared by our speakers today was useful, and that you take time to consider this opportunity of investing in a serviced apartment, investing in Aruga Apartments, professionally managed by an experienced team. We're happy to be of service to you, and we hope that we can welcome you into our community of unit owner investors. Thank you, and I wish you all a pleasant day.
All right. Thank you, Miss Bell. So let's be optimistic. We will all recover after this pandemic is over. All right. So with that, thank you very much again to Mr. Claro, DG Cordero Jr., Miss Cindy Tan Jarabata, and Miss Isabel Rufino de Leon for sharing with us your time and expertise. I'm very sure that our audience learned a lot from our discussion today. Business World would also like to thank Aruga Apartments by Rockwell for making this webinar possible. So visit Aruga, www.aruga.com.ph to know more about their luxury service apartments and investment offerings. And of course, thank you to everyone, to our audience for joining us this morning. You can watch the replay of this session tomorrow at 11 a.m. in the Facebook pages of Business World and our media partner, the Philippine STAR. So we also invite you to join the Business World Virtual Economic Forum Special Edition with the theme, The Digital Economy PH Towards a Faster Economic Recovery. So it's happening on May 26 to 27 this year. Head on to www.bworldonline.com/BWVEF Digital PH to learn more about this awaited event in the business scene. So be sure to follow Business World for more updates about our upcoming noteworthy projects. So again, this has been Josielyn Luna-Manuel of Business World. Stay healthy, informed, and inspired. Take care and have a happy lunch, everyone.